The cannabis industry has an overwhelming amount of revenue is now an underserved accounting niche. Following the 2018 elections, Cannabis Consumer Report stated there are now 33 states plus the District of Columbia which permit medical cannabis use, and 10 states plus DC. According to this report, the cannabis industry is expanding as the #1 most rapidly developing industry on the planet. It is crucial to remember that the best way to address the cannabis trade is by being familiar with all state laws and regulations. Since it is still currently classified as a Schedule I drug under the Controlled Substance Act for both federal and Wisconsin state laws, to best serve cannabis industry clients, accounting professionals should be familiar with the appropriate accounting practices under Internal Revenue Code Section 280E, 263A, and 471. Section 280E is the most relevant code to become familiar with because it is used to determine what deductibles are specifically disallowing any expenses directly related to trafficking. 280E was initially put into effect to keep cocaine trafficking mob bosses from deducting the expenses of the planes that flew from Colombia on their federal tax returns. The Internal Revenue Service considers trafficking the point at which cannabis is exchanged for currency and at any costs that lead or lend itself up to that activity. The Champ and Olive cases appear parallel, but their conflicting settlements are a result of adequate record keeping. Cannabis dispensaries can deduct expenses related to all activities other than dispensing medical marijuana, including caregiving, counseling, yoga, massage, and rent, depending on the percentage of the building dedicated to dispensing. The greater the range of services offered, the more it can deduct. In the Olive case, due to the nature of the relationship held at the vapor room between marijuana sales and its other amenities, it was found to be singularly a medical cannabis dispensary on the grounds that it did not have separate business activities. Champ's reports had the ability to prove two different businesses, while Olive's lack of reporting was indicative of corruption in the system. Keeping the marijuana business separate from any accompanying businesses is what will make the cost of goods sold definable. Under 263A, the square footage where inventory is stored, purchased, or processed is the only area in a dispensary that would be applicable to cost of goods sold. Payroll allocations determine what trafficking is versus what deductible is, which is why it is important to prepare job descriptions and have employees document their time, as well as have management hold everybody accountable for doing so. Section 471 works together with 263A to allow inventory as long as there is no distortion of income and the accrual basis accounting is being used. A taxpayer could be heavily fined if using the cash basis method, because in the cash basis world of accounting, it actually prevents the matching principle from being accomplished. The appropriate method of accounting is consistent of the cost allocation and assignment beginning at the point when the transaction is entered into the accounting records. Even if the state that the accounting professional is currently licensed in allows cannabis-based businesses to operate legally, it is still federally illegal, and anyone associated or providing services to cannabis-related businesses can be sanctioned, which is why ingraining appropriate accounting practices and tools into all facets of cannabis industry client businesses will prove that they are not operating in a rogue manner, making for a smooth transition, banking, and relatively easy audits. As with any new and unfamiliar line of business, industry-focused accounting experts are needed to specialize in trade-specific custom financial reporting techniques. This is especially important if an accountant is looking to pursue the cannabis niche because extensive tax regulations and the painstaking accuracy with which accounting information needs to be documented and reported make predominance a sought-after quality when marketing for professional collaboration. Bookkeeping and tax accounting experts frequently regard specialties or niches as an approach to practice and develop. Currently, accountants possess a uniquely special moment in history where they get the chance to collaborate with firms that work with cannabis or even create their own. The legal cannabis industry should be generating over $20 billion in revenue by 2021, according to ArcView Market Research, which implies that there are numerous available possibilities for proficient accountants to enter this profession and develop their career. To all those persecuted by the drug war, the time has come to use an unjust past to create a righteous future. It has been a long road, but the world is finally evolving. So always remember to do good things, and in the end, virtue will prevail.